Hello! Imagine a future where mass urban public transportation is no longer bound by the ground. Okay, well, that future clearly existed in the mind of legendary film director, producer, and screenwriter George Lucas, who clearly provided us the future years ago in Star Wars. He must be a prophet. Now, the question is the future still bound by science fiction, or has the science finally advanced to a stage where it's no longer a question of if, but when? And can you imagine a world where you no longer drive around, but fly around, stick around, as we will go deep flying into a SPAC that I think you cannot afford to be in the dark on. Simply flying. For those of you new to the channel, I am the Simple Trader and I share with you EPG stocks, yes, explosive exponential potential growth stocks that I am buying, looking to buy, or already have flying in my freedom portfolio. I am not a financial advisor, so please understand this is all for entertainment only. Full disclosure, after deep flying operations, I am still considering whether or not to invest some cash in this stock. So I would love to hear your thoughts in the comments below. No more plugging. Let's start flying. Okay, let's get the technicals out of the way first. What's an eVTOL? Simply put, this is an acronym for Electric Vertical Takeoff and Landing Vehicle. And is this a new thing? Simply no. eVTOLs have been around, or at least the concepts have been around for over 10 years. But are they a real thing or still a concept? Well, let's take a listen to Jay Merkel, the former Deputy Vice President for the FAA Federal Aviation Administration Air Traffic Organization's Program Management Office, who is now the new head of the UAS Unmanned Aircraft System Integration Program.
I want to close with some thoughts on the next very innovative piece of technology that we see emerging, and that's urban air mobility. As I mentioned, these are aircraft that fill that void from 30 miles to 300 miles between the small drones and the commercial aircraft we know today. And probably the biggest question I get on this is this real? Are they really happening? Yes, this is more than just hype. This is more than just promotional videos. We have at least 6 aircraft well along in their type certification, which is the first step in introducing a new aircraft into operation. We are beginning to work on integrating them operationally, so the pilot requirements, the airline operating requirements, and then we're also beginning to work on the airspace integration as well.
Okay, now that we have established eVTOLs are real, let's take a look at Atlas Crest Investment Corp, ticker symbol ACIC. Yes, ACIC is another SPAC that was listed on the NYSE on the 27th of November 2020. Now, ACIC is led by Ken Moelis, who is a multi-billionaire investment banker and entrepreneur. For me, one of the most important factors of a SPAC is the leadership, because essentially we as investors are placing our money on the SPAC team to perform their due diligence when they select and vet a company before they agree to a merger. This includes everything and anything from the proof of concept, projected future growth, and future revenues. Before he founded Moelis & Company, Ken Moelis was the president of UBS Investment Bank, credited with the build-out of UBS's investment banking operations in the US. By the end of 2006, UBS was ranked top 4 in global fee pool for the first time. Simply put, this guy is another proven winner who has unparalleled winning experience in transactions and acquisitions in Moelis & Company, which combined equates to values over $3.5 trillion. Let that sink in. And let's take a listen to what Ken Moelis thinks will happen in the near future.
We're really trying to find disruptive companies who are alternative really to IPOs. We don't view it as a special purpose acquisition company. It should be named a special purpose IPO vehicle. And I think we're in a wonderful position to assess. We have 900 people around the world to assess who are the best companies in the world, who are the best partners, do the diligence, introduce them to the best investors in the world. I'm very excited about what this might lead to for going forward. We keep an unlevered balance sheet. We have a lot of excess capital. Look, a lot lot of, as you call it, our big competitors, even the most solid one, are levered 10 or 12 to 1. That's just the way a big bank works. And so when things get in trouble, they have to pull back. We do the opposite. When things are bad, we have no leverage and we move forward. I like to get aggressive when everybody else is moving backward.
Okay, on the 10th of February, a little over 2 weeks ago, a definitive agreement for a business combination was agreed between Atlas Crest and Archer Aviation. This will result in Archer becoming a public listed company with a future ticker symbol of ACHR once the merger is confirmed, which is anticipated to go ahead in the second quarter of 2021. So let's just fly straight to the numbers. This merger in effect places a pro forma equity value of $3.8 billion, consisting of a $2.7 billion valuation and a $1.1 billion capital structure. Do note that rival and competitor Joby Aviation has also just announced a merger with RTP, placing Joby at a combined valuation of $6.6 billion. Just a bit of food for thought. Let's break this down. Simply put, Archer shareholders will still own 67% of the pro forma equity. ACIC public shares, this is where you and I come in, will own 13%. The PIPE investors, who include United Airlines for example, will own 16%, and the ACIC founders will receive 3%. Okay, so who are Archer and what do they do? Archer was founded by Adam Goldstein and Brett Adcock. What a name. They set up Archer in 2020, so from all angles it is clear this is a very young startup company. Now, the founder, or in this case the founders, are one of, if not the most important factors I need to be convinced before I look to invest into any company. There isn't a lot of information on Goldstein and Adcock, but I did find this article which describes the pair's experience coming from their hedge fund financing background. They sold Vettery, a recruiting website, for $100 million in order to fund Archer, citing the reason as being aviation nerds since their early investments in SpaceX. Are you like me, unable to piece this together and scratching your head a bit? Simply put, these guys who look like they've just come out of university seem to have had a mojo moment after seeing Elon Musk and decided we need to start an eVTOL company. Well, according to this article in the eVTOL website, they have managed to snap up 40 expert engineers from rival companies like Joby Aviation, Whisk and Airbus, thus already gaining ground from hard lessons learned in the industry in these long-running companies. What I do like is that Goldstein and Adcock, coming from a financial background, clearly understands what it takes to make an idea a business. This gives me confidence that they will likely succeed. Okay, Archer Aviation put together quite an impressive investor presentation, but with all SPACs, we have to take these with a pinch of salt and think of them as more of a sales pitch. This presentation is available on their website, so I won't go through all of it, but rather I'll just highlight the main points that I think you need to know. So this is the main slide for their bullish thesis as to why we need to invest in them right now. Proof of market is taken from Morgan Stanley's research, where urban air mobility is predicted to reach a whopping $1.5 to $3 trillion industry by 2040. Archer has now, with their hires, accumulated a team with over 200 years of combined eVTOL development experience, which we touched on previously. For me, one of the most impressive achievements to justify early proof of business is their $1 billion order from United Airlines. But we have to be careful, since United Airlines, as noted before, are one of the PIPE investors. What they do note, which is of importance, is the targeted delivery should commence in 2024, which is 3 years away. Then they have a strategic collaboration with Stellantis, who are the 4th largest car manufacturer in the world by volume and manufactures cars for Fiat and Chrysler, for example. This for me is kind of a double-edged sword that suggests their future manufacturing plans are headed in the right direction, albeit not being done in-house, which in theory should reduce their margin, but on the flip side will reduce their manufacturing development and production to market time burdens. Their eVTOL is named Maker, and for me the design of it is just next level when compared to the competition. Of course, this is just a computer rendering, and until they release the actual built prototype, prototype later this year. We do not know what it will eventually look like. Now, the specifications seem impressive, and they claim it can reach speeds of up to 150 miles per hour, but with almost no noise pollution at 45 decibels, which puts it 100x quieter than a helicopter. And of course, being an EV, the benefit of running these in urban areas is zero emissions. Okay, as I highlighted before, Goldstein and Adcock should be bringing a lot of business acumen to the table, and so their business model has two streams already. One being a direct aircraft OEM business in which they want to commercialize their aircraft and look to diversify into air cargo and the DoD applications. If you ask me, they're gonna have to make these crafts very big for air cargo purposes unless they target more package courier type businesses. Then we come to the heart of what I believe is the right market to tackle from the outset, which is their aerial ride sharing business. Think of them as an air Uber. This is exactly what many cities in the world could benefit from to relieve traffic congestion and basically limbo on the roads. Now, the exciting part is they just announced they are focused on launching its first urban air mobility network in Los Angeles by 2024. They have entered into a partnership with the city of Los Angeles, which adds credence to their ongoing business plans. Now, you gotta love this slide. They provide an example of getting from Manhattan to JFK, and the cost of service they have is cheaper than an Uber X. And what's more important is it's quicker than an Uber X. That's a pretty strong argument for future use case, and the cost is quite disgustingly low. I honestly don't see the cost being so cheap though once and if they do succeed on bringing this to market and getting all the necessary approvals. I do see this starting out as a luxury kind of transportation until the supply meets and outweighs the demand, which I could see as through the roof. Now, this next slide is where I have some serious doubt. I believe the FAA will need to regulate this a lot if we are ever to see these eVTOLs flying around in the skies. I remember Elon Musk said it perfectly in an interview where he said, "Can you really imagine hundreds of these things flying over your head?" So I think it's not so much the infrastructure, but the regulations that will be the overriding factor as to how quick eVTOLs can start taking to the skies, especially in volume and in urban areas traveling at 150 miles per hour plus. I mean, you don't see hundreds of helicopters currently in a city, right? Now, this slide just has lots of assumptions, and without going into detail on the listed competitors, we are really just having to take their word for it. Okay, finally, let's just touch on the financial model. Now, they are projecting a positive EBITDA as early as 2025 with $255 million, which is absolutely insane. But what's more disgusting is they are projecting $4.5 billion positive EBITDA by 2030. Now, if this industry does literally fly by 2025, then is that figure really unforeseeable? Or is a 9-year projection quite honestly too far to see? Now, in their valuation slide, this is actually quite interesting as they benchmark their valuation against the industry. We can see their valuation of 1.2x revenues for 2026 is actually quite low compared to other well-established companies like EHang. Of course, this is before the EHang crash, I'm assuming, and Virgin Galactic. But one thing we should note is, for me, most of these other companies have provided far more in terms of proof of concept than Archer Aviation. Okay, so this industry, although is only just starting, has been in development for some time. The competition is fierce with the likes of Joby Aviation, EHang, Blade, Lilium, and Volocopter, and quite frankly, Archer may be the newest company to enter this space. Then, we don't actually know if they will ever succeed, and proof of concept is still pending their first full-size prototype, which is to be showcased later this year, fingers crossed. Having deep drilled into Archer, this for me, on paper, is an extreme risk and limited short-term gain opportunity investment. Of course, I may be very wrong. Look at EHang and what happened to them. And if Archer follows suit, then with the hype and crowd FOMO mentality, this stock could still explode. To summarize, I like the design. The design for me is of utmost importance. Look at Tesla and the flagship Model S and how their other competitors have kind of followed their design in recent times. And actually, now, I like the stock. Did I mention that ARK Invest have actually started to accumulate stock in ACIC? Yes, ARQ has added ACIC to their portfolio, which is absolutely huge, and I do see a chance they will continue to buy more and maybe even add them to the coming ARK X ETF. This this together with Ken Moelis's due diligence, for me, does put a lot of credence into Archer moving forwards. At the time of recording, ACIC is trading around $13, and for a SPAC with an announced merger, this does seem very, very cheap, and that's probably due to the recent and potentially ongoing market correction. I do see this stock running up to $20 pre-merger, which again is targeted in the second quarter of this year. But further than that, I really think this will be an extremely volatile stock that could move big with any positive news or more pre-orders in the pipeline. But I don't like the fact that we have no proof of concept, and they have clearly, well for me anyway, rushed themselves to market to gain access to liquidity. Maybe of course to take advantage of the current market appetite for SPAC investments. I mean, I don't blame them.
So let me throw this to you, Brett. Have you built something that's gone up in the air yet?
You know, the industry has been building these for the last 10 years. Here at Archer, we're flying every single week out here in California. We'll be unveiling our full-scale electric vertical takeoff and landing aircraft this year. So we're super excited. The technology here is fully mature. We're not taking any large technology bets here at Archer. We're certifying currently with the FAA here in the United States. And we view it as a matter of time here over the next 2 to 3 years as we bring this to market and enable this service for users.
But I also don't like the projections, simply because I don't think they will ever launch if they do at those prices per ride. Simply put, I think the prices will be a lot higher in order to recoup initial capital. Also, they do not explicitly tell us, are they running these ride shares, or are they going to be supplying only and partnering with an operator of sorts? I am still skeptical as to whether the FAA can, in a little over 3 years, regulate and set in place enough rules to govern all these flying eVTOLs. Plus, they actually have to certify and approve all of these. Imagine the number of safety flights tests that each of these have to go through. There seems to be a big market hype at the moment, but is anyone actually thinking about the logistics of these eVTOLs flying above potentially hundreds of people in densely populated cities? What about insurance? Surely insurance is going to be through the roof, because imagine if one of these eVTOLs crashed into a building. That is just potentially a lethal situation that could just stop the whole eVTOL industry altogether. Based on all this, I'm still kind of 50-50. So do let me know your thoughts in the comments below. I'd love to hear from you. Thank you for watching, and remember, this deep drill is based on my own personal research, so do take this analysis with precaution. Do your own due diligence and speak to a professional before you look to invest any of your money. If you are interested in other huge growth stocks that I do have in my portfolio, please check out my other videos. For more huge growth stock picks, analysis and updates, please stay tuned and consider subscribing to my channel so you get the information first. I am The Simple Trader. I try to keep this simple, and will simply see you next time.